All right. Good evening, guys. Ken at Tortoise Capital. This is the nightly strategy podcast for Monday, March 22nd, 2021. We had a good podcast this afternoon with Tharp Institute folks. Lots of good questions and answers. Had a chance to update and refresh our an executive summary of what we're going to do. I just got the link from that 90-minute presentation, and I'll get that posted tonight on Patreon for you. I thought it was pretty good. Seemed to go over pretty well. Lisa was very helpful with some truth telling of what it's like to be on the receiving end of the bar by bar work that she's been doing. So really grateful to her and Ken Hum for supporting the team. Well, let's see what we got today. So Friday we had the second day of selling that then held support at the PSAR and then closed right at the Bollinger Band mean. And so we were treating that one really as the prototypical critical state. Like what was it going to do right there? And then we made the argument that this could easily make an upward move, back to test the previous high, a downward move to come down and test the belly of the dragon and the RL10, or it might just as easily become a sideways choppy move right along the Bollinger Band mean. And so today what we got was a bit of an upward move. We had a nice little gap up, which is good because that's an orderly opening. So we had a nice little gap up, and it moved steadily north all day, reached the top of the dragon and the edge of the river at Z+1, and then pulled back and held support at the spine of the dragon. So I consider that a pretty solid start of the day, or start of the week, I should say. That's a pretty good move in the face of all that selling pressure from last week that featured an all-time high and then just disappointed for 2 full days. So this is a pretty good move as a recovery. If it just does tomorrow what it did today, this one more day just like that would take us right back to the all-time high, and all would be forgiven. And then if that happens, all it takes is doesn't take much to break to all-time new highs, and then up we go. So we're within striking distance of that kind of a move. That would be, if we saw that kind of a move, here's what else we would see. We would see the RL30 slope continue to roll upwards. We'd see the PSAR continue to march north, acting like a sheepdog, herding everything up and to the left. So that's turning out to be strong support here. We would see the dragon slowly start to roll upward and follow price. We would see the RL10, which is in the summer. Tomorrow, that should reverse and start moving up. And then either tomorrow or the day after, it would cross over the baby dragon. And then this would start to look like, yes, you guessed it, a Kata 2, because you'd have a strong move up. You'd have a measured pullback followed by a stronger move up. And we would see a swing low here at the base of the dragon. And then this dragon would probably start to roll up, so that would give you a higher low. And then we would see this, we would see a new higher high as soon as it breaches like 398. So that would be a classic Kata 2, which means that if we want to front run that, tomorrow we've got to be buying on signs of strength. And if we do that, what we're trying to do is anticipate a move that's going through, and then because the clear sign of a win would be when it crosses this all-time high. That would be the clearest win, right? And so where I'm drawing this green circle would be that would be the clear emerging dragon entry. So an entry here is front running that a little bit. You're taking a little bit more risk, but you're trying to capture this move in here, and then you can add a position as it goes up. So that would be a kata 2, and we would look back and we would say that the resistance that was the previous hump of the dragon here ends up being support here, and then up it goes. And so we would then see the dragon do this, and then up strong. That's a kata 2. That's what a bull market that's grinding north looks like. So that's the argument for the upside move. Now the move to the downside. Let's get this cleaned up here. So what does the move to the downside look like? Well, if that gets rejected, the move that we had today gets rejected, then it's really just a simple move down through the southern skin of the dragon, through the daily low in the RL90 or the RL30. It would take out the Bollinger Band mean and tomorrow's PSAR at 389. That's the important one to me, is 389, because that protects against the 2.5% sell-off and then the 10-day low. So there's about 5 little lines of defense right here in this yellow zone that have to get breached in order for this thing to be a very clear sell-off. A downward move would feature, if you waited for absolute confirmation, it would be below the 10-day low if that gets breached. Could it make that kind of a move in one day? It sure could. Because when we come over and look at these large adverse one-day moves, it's moved that far, one big red arrow in one day. So if it collapsed tomorrow, yeah, it could get all the way down and through the dragon belly and the belly of the RL10 in one day if had bad news or whatever it might be. So in my view, you could reasonably consider on an intraday basis getting short at a breach of the Bollinger Band mean, then certainly at a breach of the RL of the 10-day low and the river and the dragon belly and the belly of the RL10. So all of those are potential areas for shorts, and then you have to be short if it were to take out the belly of the RL10, because then there's no support whatsoever in the last 30 days once that violates. Because you can see down here when that got breached, it ran down to push to a 30-day low quick, fast, and in a hurry. And that would take it past the previous dragon belly, past a 5% sell-off dragon belly, RL10 belly, Z3, and all the way down to the 30-day low. So that's the argument for the downside trade. Either one of those, that upside or the downside trade, is certainly possible. I'll be prepared for the upside because today's price action has us leaning in that direction. But that's the framework that I'm seeing right now to interpret price action as it comes out here. So I will be ready from here to be adding adding positions. Like if it breaches the upper skin of the dragon, which is also today's high, you have to be ready to add a position there, and then another position if it breaks above the RL10 hump. Okay. If you're entering inside the dragon, it can only be because you're doing the intraday trading. But using end of day trades, really, an entry at 394.50 is evidence of upward buying pressure. So that would, the mechanical entry would be right here, and then a second position right here. Okay. And then the first short that I could justify, I think, would be violation of the Bollinger Band mean. That gives it a little bit of a room. And then a second position at the collapse of the RL10. Then I think you'd be in good shape. Okay. Let's take a look at the sectors and see what we got today. Pardon me. All right, so the S&P gave us a pretty good day today at 0.8% net. Treasuries were a little better at 1.12. They're still below the key price level of 140. The Qs were the strongest of the U.S. indexes today at 1.25 or 1.75, 1.75. We saw underperformance from the completion index, this DWCPF. That's a combination of small caps and mid caps. Then the Russell was down 0.75, and then emerging markets also underperformed at minus 0.3. Let's take a look at the few things that were better than the market today. So we had the FANGs at 1.3 and S&P Biotech at 1.4. S&P Tech was at 1.75. The ARC Innovation and ARC Genomics up 1.9 and 2.3. And then the symbols that did well today, old reliables, Apple, Microsoft, and Tesla. And PayPal had a nice day, all of those. So it was basically tech and biotech today. The underperformers then, in terms of sectors, so the moonshots, 0.64, staples and discretionary, 0.5, agriculture, clean energy, Mexico, precious metals, lumber, and oil, all between flat and minus 0.14, so basically flat. We had, see, the blended commodities, minus 0.18, materials down a third, lithium down 0.4, Japan down 2/3, commercial real estate, Brazil down 1.25, 1.5, finance, oil exploration, marijuana, energy down 1.7 to 2.0, blockchain, Ethereum, the blockchain large caps all down 4 to 4.5. Then the VIX and Bitcoin itself down 6.5. Symbols, companies that underperform, Cliff down 4.5, U.S. Steel 2.75, Space down 2.7, Alcoa 2.25, Devon Energy and Twitter, and NEO. So mostly today the follow through was tech, the biotech, and then old school tech did pretty well. I mean, that's the Qs, XLK, Apple, and Microsoft, and Tesla and PayPal, the only disruptors that were in the green. Okay. So actually a relatively narrow set of strength today, not a broad-based bounce at all. So that leaves me cautious about the upside. I don't like the fact that, the Russell underperformed today. We want to see that trend reverse tomorrow. Okay. All right. So, yeah, there we go. Let's take a look at. Let's take a look at the daily report first, and then we'll go visit some of today's trades for the trading lessons. All right, that's available for you for download there in the handout section, if you didn't get it from Patreon yet. Okay, so let's go straight to the dashboard. And we remain in bullish normal conditions. We're overbought on most of the time frames. The 30 and the 10-day are just above average, very close to being overbought. So we are within, arm's reach of dramatic breakouts to the upside, and that's what the risk Z is showing us here. I'm a little concerned that we're right at 1.0 already without having broken out to a new high. And the last time we had the risk Z at that level, it rolled over and gave us, about a 5% sell-off. So that's why I consider this kind of vulnerable right now. And the ADX trend at only 13.5 says the bulls are still pretty tentative. The risk Z is still showing risk on, and it's not an excessive reading yet. So at 1.1, we are still in risk on. It's still at a comfortable level and supporting the upside moves. We had one channeling signal today, and that was based on the weakness in the Russell. So at the first sign of strength tomorrow, that will be an indication that maybe the Russell has found support and is going to hurry up and play catch up. It lagged the S&P last week significantly. So this is an opportunity for the short-term momentum traders to turn the corner and start adding juice back into the Russell. So we'll be mindful of that possibility. The leveraged play on that we like is TNA. That's the triple leveraged Russell ETF, where you just go directly with the futures, of course. Let's see. Dow Tactical Summary next. Let me let that come up on your screen. So we've got 3 dojis to work with. Okay, sorry about the delay. Switched connections. All right, so we've got 3 dojis in the Dow 30. The interesting one to me is going to be American Express, which is a doji, a channeling. It was a triple screen, a 551W, It's number 2 on the max pain range compression list and has a auto framer reward to risk ratio of 4.2. Cisco had nice big breakouts. The recording should be squared away for you. I'm sorry about that. I can't help it. Here's a number of trades from the day to illustrate important concepts. This is Tesla in the afternoon on the 1-minute charts that shows a sideways quiet channel that had consolidated above the VWAP, and when that collapses, you get a collapsing dragon, a Z3 pinch breakdown, and a crossing of the VWAP. And if you get your short position here as it crosses the VWAP using the top of the channel, call it the Z3, or at the hump of the dragon, you get a 4 to 6 hour trade in an orderly fashion, and that's not even counting a re-entry or a additional position short on this collapsing dragon. So that's 4 or 5 hours of opportunity trade in the afternoon on the 1 minutes. If you're trading it on the more relaxed 10 minutes, not only do you have the opportunity for the Kata 2 entry on the cross of the VWAP with an orderly exit at the PSAR. Notice how powerful and useful and smooth the 10-minute PSAR is as an exit. So you make bank here. There's that sideways channel. The breakdown of the VWAP happens at the same spot because of math. And there's your $4 risk, and there's your 4-hour trade on a single position. 10 minutes, really powerful. Here's XLK. We identified that as a potential leader today. A minimum manageable risk box, 1, 2, 3 entry. Reasonable stop here at the Bollinger Band mean. Second position when you get the Z3 breakout and a crossing of the RL270. And then the orderly exit as you just manage it with the 10-minute PSAR. Bang. If you wait for the Bollinger Band mean, it's right there. 10 minutes, real powerful. Here's Apple. It's the same trade. You get the minimum manageable risk box excursion. If this gets you out because you want to protect against reversion to the VWAP, then this Kata 2 gets you right back in. If you get out here, you get back in here. The third trade is a scratch. If this doesn't get you out, you add a second position and a third position here anyway. I want you to notice once more the power of the 10-minute PSAR as a really good guide to protect you while you're in a trend. The value of these exits is that they're protecting your open gains against the unsurprising return to the VWAP. So giving back this little piece and then exiting here protects you against losing 2 or 3 times more. So that's a really good exit. That's a really good reentry. I also want you to notice that the PSAR, where it crosses the VWAP here, is an important indicator that this has legs. So the VWAP goes fast on new volume. The PSAR is slower to adapt, but by the time the PSAR crosses the VWAP, you have an established trend that's starting the next leg up. That makes this a really good entry that you can pile on. Here's Cliff on the other side, where you have immediately rolling over. The spring crosses the RL270, crosses the VWAP, breaks down through the PSAR short, put a stop at the top of the dragon. That's 20 cents. You get a 3-hour trade down to an orderly exit where the PSAR comes down and is taken out. Routine 2-hour win. Here's one where you're taking a look at this symbol, which has a big gap down, sold off, failed again. This is a dragon collapse here that's short. And then it consolidates into this location here. Failure to fail further, rising lows, the beginning of an entry to the upside. You could either get long here with a stop and reverse here, or here, or here, or these entries at 5 and 6 could be additional positions on the short side, because if this fails through 4, 5, and 6, you might get another move like this. So you're only risking a sliver with an immediate stop and reverse. But if that works, you will make bank on the yellow box to the point where you would just routinely enter on a breakout above the skin of the dragon, or that PSAR dot -1. And then when you make that frame, your upside potentials for reasonable targets are these purple dots: a return to the VWAP and the hump of the dragon, a return to this intermediate resistance, a move to return to the high of the day and the Bollinger Band mean, a return to the long-term fair value of the RL270, and a move to the far side of the river, which also coincides with yesterday's VWAP, and a closing of the gap. So if this thing works in our favor, then each one of those price levels is a confirmation that the move is happening, and those are all reasonable intraday moves. And then depending on the size of your risk, you can see you got 5 or 10 to 1 potential, so that makes this a really good entry, even if you wait for one. And then the actual move unfolds in that usual way. The exit I like is simply the PSAR, where you experience the high of the day at the RL270 and the Z3 pinch, and then it rolled over. I want you to notice the indicators that this thing is losing strength. It rejects the RL270, the RL10 rolls over, crosses the baby dragon, re-enters the floodplain, enters the dragon, crosses the spine, departs the dragon, enters the river, fails through the river. Summer turns to spring, turns to fall. So anywhere in here, from really the dragon skin onward, is a good exit. I like the PSAR. That's perfectly fine. Plus, you're running into the close of the day, so unless you're going to have an overnight position, you've got to exit somewhere in this zone anyway, and that's about a 3 to a 6 hour trade, depending on how tightly you had made your stops, and that's not even counting additional entries as you cross the VWAP, cross the Bollinger Band mean, depart the river, and turn to summer. So just a quick look at some additional trade frames. Take good care. We'll see you in the chat room tomorrow.